Ron Siegel Radio, your home and mortgage connection.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family, your business can benefit in current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And then remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by. While I do have a great team when it comes to developing a financing plan, a plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference. 800-306-1990, 800-306-1990. And yes, we are celebrating today. We celebrate every day on Ron Siegel Radio. What are we have on tap today? It is National Baked Scallops Day. I like scallops. I like scallops. I like them baked. I like them pan-fried, seared. Good stuff. Those look like deviled eggs. Those almost don't even look like that. now I see the shell dish. Okay. That the sides look like is almost like an egg, but I guess I need to straighten my glasses a little bit. And I am referring, if you're watching us on ronsiegelradio.tv, any of our socials, or the ABC News and Talk, AM 1490 or FM 98.1 video feeds. That's where I was looking at the image that we have of our baked scallops. Yeah. Now let's see what the markets are doing today. We've got the Dow Jones Industrial Average down 520 points. The NASDAQ down 297. S&P 500 is down 65.61. Oil, it is up another $7.75 a barrel. Yeah, that's not exciting. We've got the 10-year Treasury is up 2 basis points, 4.25, and the mortgage bond down 21 basis points. Remember, bond down, rates up. Not exciting news right there. And do we even want to look at it? Well, being that we are, we're dealing with your home and your finances, we should look at what's going on with gasoline prices across the country. $3.59, $3.60 a gallon is the price nationally. When you add the Gavin tax, it's the California tax, $5.37 in California. And it's going to get worse. Thank you, Gavin Newsom. Yes, your policies are the reason why the gas prices have gone up, are the highest in the country. Higher than Hawaii. Can you believe that? I mean, our gas prices here, highest in the country, higher than Hawaii. Unbelievable that we get to deal with that. But as they say, it is what it is. Yeah, California, $5.36 a gallon. Oof. Okay, but, we've got this. We can call it a war. We can call it a conflict. You can call it whatever you want to call it. It's, I would say it's kind of a humanitarian mission. Iran has been harming us, hurting us, 47 years. Finally, we've got a president that is doing something about it. And I've shared with you many times, you're not going to get real information by listening to any of the media. You want right-leaning information, go to Fox News. You want left-leaning information, go everywhere else. But you're not going to get real information. So what do? Well, I monitor those stations as well, but you have to pay for your own news from sources that you can vet. And that's what we do, is we pay for these so you get information that's not publicly discussed. Like, what's the real meaning behind this war? Why are we doing what we're doing? Why have we done it in the order we've done it? Well, first off, the president is a businessman. He's not a politician. So he said 10 or 12 years ago, when we went into Iraq, keep the oil, pay for the war. Well, our politicians didn't do that. When we went to Venezuela, what did he do? Well, he made an agreement. I guess it was a one-sided agreement because Venezuela didn't have much choice. The U.S. is going to participate in revenues from the oil. There's not going to have any more cheap oil going to China. They're not going to have cheap oil going to Cuba. They're not going to have cheap oil going anywhere else in the world. Everyone's going to pay the market price, $94.64 a barrel right now for oil. Then what happens? Okay, so who does that harm? Well, Cuba and China were the big recipients. They got to pay their fair share now. Iran. Okay, so U.S. is getting the oil from Venezuela, collecting revenue. Now what's going on in Iran? Well, Iran was selling oil to China and others. Well, if the U.S. stops that oil from going to China, who gets hurt? If stops the Iranian cheap oil. Well, China gets hurt there too. So what does that mean? Well, do you think China's likely to continue, or are they going to have as much leverage if they've got to come to the U.S. for oil and we're going to them for the things that we need? Yeah, it's going to help put us more on an even playing field. It's going to even out that leverage. Do you hear that on the news anywhere? You hear the news stations talking, oh, the president's going into Iran and there's no real reason for it other than the fact that since October 7th, Iran has done attacks on U.S. military installations over 100 times. But that doesn't make the news because unless they are successful, unless they kill people, the news doesn't cover it because they're anti-Trump everything 24/7. But when you listen to see what's going on, again, President Trump playing chess, in fact, 3D chess, and the rest of the media is all playing checkers, or maybe, I don't even know if they still have the game. We used to call it Chinese checkers. It was with the little marbles. I don't know if that game's even out anymore. But that's what's going on. That's why this war is a just war, because now if China doesn't have access to cheap oil from Venezuela and from Iran, and they're paying market prices, their costs are going to be more on a level playing field with the rest of the world. Might even disincentivize them because their economy is already hurting. Maybe it'll give them a second thought about their desires of going into Taiwan. We already told you that China wanted Venezuela to go into Guyana to keep the U.S. busy. Well, maybe the U.S. military is not going to be quite as busy if they're not dealing with Iran as well. So all of these things play into what we're seeing, and the media is not talking about these issues. If you're hearing them anywhere else, other than on Ron Siegel Radio, please share with me where you're hearing some of these things. I'd love to know. Good morning, Mitchell. Glad to see you with us over there at Disneyland. I hope you're having a great day in the Magic Kingdom. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, the market called it a hot market. That's real estate. The data tells a very different story. We're going to talk about it. Spring is here. Buyers and sellers who prepare now will win. We've got some free guides, the VA loan myths, tax season, and strategic debt planning. All that and more. Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you missed any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Are you a veteran, own a home, and need money? The Siegel lending team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel lending team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452. You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Mortgage Minute today being brought to you by rsrlinks.com/mobile app, rsrlinks.com/mobile app. And let's see what rates did yesterday. And obviously, we tell you the real rate. It's provided to us by OBMMI. They provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates, with consumers across 35% of all mortgage transactions nationwide. They do not tell us points paid, points received, or the APR. They tell us the number you put in your mortgage calculator to determine your principal and interest payment. If you don't have a mortgage calculator, it is free as part of our suite of calculators. rsrlinks.com/calculators, rsrlinks.com/calculators. What did rates do yesterday? Conventional, they were all up yesterday, so I'll just go there at the beginning. Conventional 30-year fixed, 6.125. Jumbo 30-year fixed, 6.358. FHA 30-year fixed, 5.944. VA 30-year fixed, 5.75. And the USDA 30-year fixed, 5.836. Every one of those were up. If you want our thoughts about the market each and every business day morning, as early as the data allows, join the Ron Siegel Radio community, rsrlinks.com/HBOD, rsrlinks.com/HBOD. Let's see what the markets are doing right now. So we've got the S&P 500 is down 82.35. We've got the 10-year Treasury. That one is up 2 basis points, 4.25. And the mortgage bond is down 19 basis points. Remember, bond down, rates up. Why is it happening? That is why you tune into Ron Siegel Radio. So, all being driven right now by oil. Oil has climbed back over $95 a barrel, even after the International Energy Agency announced that 400 million barrels would be released from reserves. More attacks on ships in the Persian Gulf, as well as the U.S. saying they are not ready to escort ships through the Strait of Hormuz, really started the rally in oil yesterday. Oil release from reserves will add some supply. It can take some time before that oil is taken from the reserves, shipped, and usable. The big story here is that optimism that this will be over soon is fading, which is causing inflationary fears in the bond market. Today, we're going to get at, I think it's 10 o'clock Pacific time, a 30-year bond auction, which could impact the markets depending upon the level of demand. Yesterday's 10-year auction was met with average demand. The personal consumption expenditures report, that's going to come out tomorrow morning, 5:30 Pacific time. The BEA will release their personal consumption expenditure report for January. They are still way behind. The BLS just released the Consumer Price Index for February earlier this week. The most recent readings were inflation at 2.9% and core inflation at 3%. The market is expecting headline inflation to either remain at 2.9 or decline 0.1 to 2.8. Core is anticipated to remain at 3% or climb to 3.1, depending on the monthly figure. As always, healthcare and shelter will be the key to determine where these figures land, but clearly there is not much progress happening. The markets may not react much to this report as it's for January. The February CPI report is 0.5% lower, and all of this is ahead of the March, where oil is going to have an impact on inflation. Now, if we want true inflation, the current real time, all of these data, as I've shared with you, It's all old stuff. Truflation comes out with real-time inflation, and they came out with their number. I think it's 1.6% on the headline, 1.5% on core. And the reason I bring that up is Kevin Warsh, expected to be the next Fed chairman. He follows what the real-time inflation is, not just what the BS coming out of the Bureau of Labor Statistics and the old data from the BEA. So when he takes over and he controls all of the staff of the Federal Reserve, when he starts publishing more of this data, of real-time data, maybe it'll get the government data to figure out how to get legitimate data. So we are not dealing with old stuff. Housing starts and permits, expected increase in housing starts in January, but it's all due to multifamily before this report. Multifamily starts had been slowing down. That could eventually put some pressure on rents in the future, but that figure just jumped 30% in this report. Single family starts, however, did decline. Permits were lower for both single and multifamily, showing that behind these starts, there is less supply. Initial jobless claims measures individuals filing for unemployment benefits for the first time, fell 1,000 to 213,000. This figure remains low, but does not capture those entering the gig economy. Continuing claims of those who continue to receive benefits after their initial claim fell 21,000 to 1.85 million. That is the Mortgage Minute, brought to you by rsrlinks.com/mobile app, rsrlinks.com/mobile app. Real-time real estate segment today being brought to you by rsrmoney.com, rsrmoney.com. One of the toughest real estate market in over 100 years is already behind us, and most people have no idea they just lived through it. I am Ron Siegel, Certified Liability Advisor, helping families build wealth through strategic debt management. You're listening to Ron Siegel Radio, and today we're doing something a little different. We're going to talk about where the real estate market has been, where the data says it's going, and what that means for you right now. Let's start with some context because I think it matters. I recently came across some research from one of the most respected voices in real estate coaching, someone with a 40-year track record and a 92% accuracy rate on market predictions. And his assessment of the last few years was sobering. He called it the hardest real estate market in 107 years, not 2008, not the savings and loan crisis of the late 80s, the period we just came through. Sales volumes dropped to levels not seen since 1995, and there are 80 million more people living in this country today than there were then. Think about what that means in terms of demand that simply wasn't being served. But here's why most people missed it. Consumers weren't hurt the way they were in 2008. There were no widespread foreclosures, no dramatic headlines. The damage was absorbed inside the real estate and mortgage industry, not on the evening news. So the general public largely moved. They moved on while the professionals navigating those markets quietly endured one of the most difficult stretches in modern history. That context matters because we are now on the other side of it. But before we talk about where the market is going, we need to spend a moment on where it came from, because I think there is a fundamental misunderstanding in the minds of a lot of buyers, sellers, and homeowners. And that misunderstanding is costing people. The 2020 to 2022 real estate market was not normal. It was not a high point. It was not something the market earned. It was artificial, entirely constructed by a set of circumstances that had never existed before in the modern era and are very unlikely to exist again. Here's what actually happened. When the pandemic hit, the federal government responded with an unprecedented wave of financial intervention. Stimulus went out to households across the country. PPP loans flooded small businesses with cash, and the Federal Reserve, in an effort to keep the economy from collapsing, dropped interest rates to near zero. Essentially, free money. What do you think happens to real estate when the cost of borrowing drops to almost nothing and households are suddenly sitting on cash they weren't expecting? Demand exploded, and supply, already constrained, couldn't come close to keeping up. So prices shot up. Bidding wars broke out on nearly every listing. Buyers were waiving inspections, waiving appraisals, writing personal letters to sellers, offering tens of thousands over asking just to be considered. In some markets, homes were under contract within hours of hitting the market. And people started to believe that was just how real estate worked now. It wasn't. It was a mirage, a temporary condition built entirely on intervention that was always going to end. Yes, it was always going to end. And when the Federal Reserve began raising rates to combat the inflation that all of that stimulus created, the mirage evaporated almost overnight. Rates went from the low threes to the sevens in a matter of months. The buyers who had been racing to purchase at any price suddenly couldn't qualify for what they were offering. Transaction volume collapsed. The industry went from the most frenetic market in a generation to one of the slowest on record, almost instantly. That is not how healthy markets behave. Healthy markets don't do that. Artificial ones do. And this is the part that I think is really important for anyone making a real estate or financial decision today. If your reference point for what the market should look like is 2021, you are collaborating to an illusion. You're calibrating to an illusion. Sellers who are pricing based on 2021 comparable sales are overpricing. Buyers who are waiting for 2021 rates to return are waiting for policy experiment that the Federal Reserve has made very clear it has no intention of repeating. And homeowners who feel like they missed something are measuring themselves against a benchmark that was never real. The real benchmark is the pre-pandemic market, and by that measure, things are actually in pretty good shape. Inventory levels are normalizing. Days on market are returning to pre-pandemic ranges, and sales volume is projected to increase by approximately 14% in 2026. That's not a small number. That represents a meaningful shift in market activity and is already showing up in the data. From a rate perspective, the forecast for 2026 points toward modest improvement, not a dramatic drop, but a gradual easing that should bring more buyers off the sidelines and continue the recovery in transaction volume. The Federal Reserve has signaled a careful data-dependent approach to any further rate adjustments, which means the market is likely to see steady, measured progress rather than the kind of dramatic swings we experienced during the pandemic years. Now, one aspect of today's market that often surprises people, roughly 30% of real estate transactions right now are all cash purchases, no mortgage involved. That tells you something important about who is active in this market. These are established households, equity-rich sellers rolling proceeds into the next home, investors and multi-generational families pooling resources. Understanding who is actually transacting today is critical to understanding where the real opportunities are. Multi-generational buying is one of the fastest growing segments in real estate right now. Families buying together, combining incomes and resources to purchase a home that works for multiple generations. The demographic data supports continued growth in this segment, driven by affordability pressure, aging parents, and shifting attitudes around family living arrangements. On the first-time buyer side, the path is longer than it was a few years ago, but it is not closed. The buyers who are preparing now, working on their credit, building savings, understanding their complete financial picture, those are the buyers who will be positioned to move when the window opens for them. And that stability is good news. A market that moves in a predictable direction, even a measured one, gives buyers, sellers, and families making long-term financial decisions something they can actually work with. Volatile markets built on intervention are impossible to plan around. This one you can plan around. The bottom line from everything the data is pointing to right now, 2026 is shaping up to be a year of real, measurable recovery, not a return to the artificial highs of 2021, but a return to a market that functions the way a real healthy real estate environment is supposed to function. One where preparation, strategy, and a clear understanding of your financial position determines outcomes far more than luck or timing. And that is exactly the kind of market where strategy beats rate. Always. If you want to understand where you stand in this market, whether you're thinking about buying, selling, or just want to get your financial house in order before the opportunity presents itself, go to rsrlinks.com/keysteps. That's rsrlinks.com/keysteps. It's a starting point to help you understand what you have, what you need, and what the right next move looks like for your situation. The market has been through something significant. The data says the recovery is real, and the families who come out ahead will be the ones who took the time to understand their position and made decisions based on strategy, not emotion, and not the hope that yesterday's market is coming back. I am Ron Siegel, your certified liability advisor, helping families build wealth through strategic debt management. Thanks for listening to the Real-Time Real Estate segment brought to you by rsrmoney.com, rsrmoney.com. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, VA loan myths, tax season, and strategic debt planning, all that and more. Reach me anytime. Off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Got a bit of a workshop for you today. This one is brought to you by Mortgage 101. Brought to you by rsrlinks.com/VA loan, rsrlinks.com/VA loan. If a real estate agent told you VA loans are harder to close, weaker offers, and more trouble than they're worth, they were wrong. And today we're going to prove it, one myth at a time. I am Ron Siegel, Certified Liability Advisor, helping families build wealth through strategic debt management. You are listening to Ron Siegel Radio, and whether you're a veteran, active duty service member, or someone who loves one, this show is for you today. I've been doing this since 1983, and in all that time, few things frustrate me more than watching a veteran get steered away from the best loan product available to them because somebody in the transaction didn't know what they were talking about. Today, let's fix that. Let's talk about the VA home loan because after more than 4 decades in this business, I still hear the same myths being passed around like they are facts. And those myths are costing veterans the homes they earned the right to buy. Myth number 1, VA buyers don't have skin in the game because they put 0 down. This one I hate the most of all. Here's what the data actually shows. The average VA buyer in 2024 had a higher credit score and more money in the bank than the average FHA buyer. Not a little higher, meaningfully higher. And yet veterans are being steered away from using a benefit they literally served to earn. Yes, they've got more skin in the game because they put their life on the line. They served all of us so we could do what we do because of what their efforts and what they were willing to do. Think about that for a moment. A veteran who spent years in uniform, who put their life on hold, in many cases put their life on the line, comes home, wants to buy a house, and gets told their loan is weak. That's not a VA problem. That's an education problem. Myth number 2, VA loans take forever to close. When you're working with a lender who actually knows the product, VA loans close in the same time frame as conventional loans, sometimes faster. The appraisal process can add time in some markets, but a competent lender accounts for that up front and manages the timeline accordingly. This myth exists because of lenders who don't know the process, not because of anything built into the loan itself. Myth number 3, The seller always gets stuck paying the veteran's fees. This one has some nuance to it, so let me break it down simply. The VA does have non-allowable fees, the cost the veteran cannot pay, but only when a lender's origination charges exceed 1% of the loan amount. When you work with a lender who structures the transaction correctly, this is a non-issue. The problem isn't the VA loan. The problem is the lender who doesn't know what they're doing and ends up making the veteran's offer look weaker than it actually is. Myth number 4, VA appraisals kill deals. The VA appraisal process actually has some built-in protections that other loan types don't have. There's a process called Tidewater that gives everyone a chance to provide additional information before a low value is assigned. And if you still disagree with the appraisal, there's a formal reconsideration of value process. In fact, the conventional lending world is currently studying how to adopt a similar model. So the loan type that supposedly has the worst appraisal process is the one everyone else is trying to copy. Let that sink in. Now, here's something I want every veteran listening to understand. There is a real difference between a lender who accidentally closes 2 VA loans a year and one who has studied, trained, and made VA lending their focus. That difference shows up when your offer gets accepted. It shows up when another lender tells your veteran they don't qualify, and the right lender finds out they actually do. Here's something else worth knowing. 87% of VA loan usage nationwide comes from veterans, not active duty service members. So even if you live nowhere near a military base, there are veterans in your community who have earned this benefit and may not know how to use it. They may not know they could be exempt from the VA funding fee because of a disability rating. They may not know about property tax exemptions in their state that could save them thousands of dollars every single year. They may not realize that being eligible for a VA loan and actually qualifying for one are two completely different conversations, and that understanding the difference is exactly where the right advisor earns their place at the table. And here's one more thing worth mentioning. If you're a surviving spouse of a veteran who passed away as a result of their service, you may have your own VA home loan benefit. It's one of the most underused and least talked about benefits in the entire program. If that describes your situation, please reach out. That conversation alone could change everything for you. So, what's your next step? If you're a veteran, an active duty service member, or a surviving spouse, and you want to understand what you've actually earned, go to rsrlinks.com/VA loan. That's rsrlinks.com/VA loan. And if you want to get your overall financial house in order before you buy, whether you're a veteran or not, start at rsrlinks.com/keysteps. That's rsrlinks.com/keysteps. Don't let a myth stand between you and a benefit you've earned. Strategy beats rate always. I am Ron Siegel, your certified liability advisor, helping families build wealth through strategic debt management. Thanks for listening to Mortgage 101, brought to you by rsrloans.com/VA loan, rsrlinks.com/VA loan. Let's see, I think we can do Borrow Smart segment, brought to you by gethomeselect.com. It's tax season, and while most people are scrambling to find receipts and figure out what they owe, the smartest households are doing something completely different. They're asking a better question. I am Ron Siegel, certified liability advisor, helping families build wealth through strategic debt management. You're listening to Ron Siegel Radio. Every year around this time, I get calls from people who just sat down with their tax preparer and had one of those, quote unquote, wait a minute moments. Maybe they realized they paid more in taxes than they needed to. Maybe they found out their estate isn't set up the way they thought it was. Or maybe, and this one surprises people, they discovered that the way their debt is structured is actually costing them more than it should. Here's what I want you to understand today. Tax season isn't just about filing a return. It's about taking inventory of your entire financial picture, and debt is a big part of that picture. Now, I am not a tax advisor, and I'm not going to pretend to be one. What I am is a certified liability advisor. And what that means is I look at the liability side of your household balance sheet the same way a good financial advisor looks at your assets. Let me ask you something. Do you know your household blended interest rate? not just your mortgage rate, not just your car payment, but what the combined cost of all the debt flowing out of your household every single month. Most people don't. And that number matters a lot, especially when you're sitting down with a tax professional trying to figure out where your money went. Here's another thing worth thinking about right now. The lifetime gift and estate tax exemption is currently sitting at nearly $14 million. That sounds like a lot, but for most families it is. But here's the part that doesn't make the headlines. That number is set to drop significantly at the end of this year when certain provisions of the Tax Cuts and Jobs Act are scheduled to sunset. If you have a home with equity, assets you've been building, or a family you're wanting to protect, now is not the time to wait and see. I work alongside trusted estate planning attorneys who help families get this right. There's no cost to have that conversation. These professionals are compensated by the carriers and the work they do, not by you. But you have to take the first step. And honestly, tax season is the perfect time to do it. You've got your documents out. You're thinking about your money. You're thinking about what you owe and what you own. That's exactly the mindset you need to take a serious look at your complete financial picture. So here's what I want you to do today. 2 things. First, visit rsrlinks.com/keysteps. That's rsrlinks.com/keysteps, and take a few minutes to get your financial house in order. It's a simple tool that helps you see where you stand and what steps make sense for your situation. Second, if estate planning is something you've been putting off, and most people have, go to rsrlinks.com/estate. rsrlinks.com/estate. Let's get you connected with someone who can help protect what you've earned, what you've worked so hard to build. Remember, strategy beats rate always. Strategy beats rate always. And right now, the best strategy you can have is simply paying attention. I am Ron Siegel, your certified liability advisor, helping families build wealth through strategic debt management. Thanks for listening to the Borrow Smart segment brought to you by GetHomeSelect.com. GetHomeSelect.com. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, spring is here, and sellers who prepare now will win. Got a free guide for you. And one key step, one key sign, we're not headed for a wave of foreclosures. All that and more. Reach me anytime. Off air number 800-306-1990, 800-306-1990, RonSiegelRadio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That's my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Spring is here, and if buying or selling a home is on your radar, this year, the next few months may be the most important window you have. The question is, are you ready? I am Ron Siegel, Certified Liability Advisor, helping families build wealth through strategic debt management. Welcome to real-time real estate right here on Ron Siegel Radio. Every spring, the housing market wakes up. More listings hit the market, more buyers start shopping, and competition picks up fast. That's just the nature of the season. And whether you're thinking about buying your first home or selling the one you're in, knowing what to expect before you step into that arena makes all the difference. So today, I want to walk you through what buyers and sellers need to know right now and share 2 brand new resources we just put together specifically for this spring market. For buyers, If you're thinking about buying a home this spring, let me be honest with you, the market is active. There's more inventory than we've seen in a while, which is good news. But more inventory also means more competition from other buyers who've been waiting just like you. The buyers who win in this market aren't necessarily the ones with the most money. They're the ones who are prepared. There's a big difference between being eligible for a loan and being truly ready to buy. Eligibility means a lender says yes. Readiness means you walk into the process knowing your numbers, understanding your options, and having a strategy. That's especially true for first-time buyers. If this is your first home, there are programs, strategies, and steps that many buyers never hear about because nobody took the time to explain them. We put together a first-time home buyer's guide specifically for people in your shoes. You can grab that at rsrlinks.com/FTHB. That's rsrlinks.com/FTHB. And if you'd like more complete spring buyer's guide covering today's market, what to expect, what to watch out for, and how to position yourself, that's available at rsrlinks.com/HBG. rsrlinks.com/HBG. For sellers. Now, if you're on the other side of this, thinking about selling your home this spring, here's what I want you to understand. The spring market rewards sellers who are strategic. Simply putting a sign in the yard and hoping for the best is not a plan. One of the biggest mistakes sellers make is underestimating the importance of exposure. The more eyes on your property, the stronger the offers you attract. We work with an ad platform that gets your property in front of a massive audience, far beyond what a standard listing delivers. When more qualified buyers see your home, you have more choices, and more choices means better terms for you. We also walk through pricing strategy, timing, and how to position your home so it stands out, not just sits there. If you want to understand what a smart selling strategy looks like in today's market, get a copy of our Spring Seller's Guide at rsrlinks.com/HSG. That's rsrlinks.com/HSG. And for a deeper look at how to get maximum exposure and top dollar for your home, visit rsrlinks.com/salesmax. rsrlinks.com/salesmax. Bottom line, whether you're buying or selling, spring moves fast. The families who come out ahead are the ones who took the time to get informed, get prepared, and work with people who know what they're doing. Start by getting your financial house in order. Visit rsrlinks.com/keysteps. That's rsrlinks.com/keysteps. And take the first step toward a smarter move this spring. I am Ron Siegel, your Certified Liability Advisor, helping families build wealth through strategic debt management. Thanks for listening to the Real Time Real Estate segment, brought to you by rsrmoney.com, rsrmoney.com. I think we have time for one more real-time real estate segment, brought to you by rsrmoney.com, rsrmoney.com. One key sign we're not headed for a wave of foreclosures. Foreclosures are ticking up, and that may make your mind jump straight to thoughts of 2008, specifically to what happened in the market during the housing crash. So let's do exactly what your brain already wants to do and see if there's any connection there. The simple truth is foreclosure filings are rising, but they're nowhere near crisis levels, and that's not where they're headed either. Here's why. Take a look at serious delinquencies, loans that where the homeowner is more than 90 days late on their mortgage payments. While those have increased slightly, data from the New York Fed shows they still remain low, and they aren't anywhere close to levels seen when the market crashed. If you're watching us on RonSiegelRadio.tv, any of our socials, or the ABC News and Talk AM 1490 or FM 98.1 video feed, you are seeing a chart of mortgage delinquency rates, and they are still nowhere near crash levels. Right now, about 1% of mortgages are seriously delinquent. That's only 1 in 100. In the years around the crash, they were up around 9%. That's 1 in 11. That's a big difference. And it's important to remember, not all delinquencies even become foreclosure filings. Some homeowners are falling behind. Some owners who are falling behind will work out repayment plans with their banks and lenders because banks don't want to see a wave of foreclosures either. That's why foreclosure numbers are even lower than delinquencies. Adams shows only 0.3% of all homes are currently going through a foreclosure filing. And those won't even go all the way to full foreclosure. That's not a wave, that's a ripple at most. If people are falling behind on payments, Why aren't there even more foreclosures? And maybe you're wondering, if people are struggling financially, why aren't there more foreclosures? Here's the easiest answer to that. When households feel financial pressure, they tend to prioritize their mortgage payment above almost everything else because the last thing they want to lose is their home. Data from the New York Fed shows serious delinquencies have risen more for credit cards and auto loans, but mortgage delinquencies and home equity lines of credit, borrowing against the value of your home, are not seeing the same big uptick. Take a look at the chart that we're showing you right now about, despite rising delinquency elsewhere, Americans continue to pay their mortgages on time. In other words, people may fall behind on their other debts, but they fight hard to keep their homes. In today's housing market, they're also in a strong equity position to do so. Home equity changes everything. Many people have built significant equity over the past several years, and that creates, as Daryl Bloomquist, VP of Market Economics at auction.com explains, quote, distressed homeowners, many times they still have equity in their homes. There's an opportunity for them to sell that home, avoid foreclosure, and walk away with equity, unquote. That's a major difference from 2008. Back then, many homeowners owed more than their homes were worth, and selling wasn't an easy solution. Today, for many people, it is, and even in situations where equity isn't enough, homeowners are encouraged to contact their loan servicer early to explore alternatives to foreclosure. Bottom line, are foreclosure filings rising slightly? Yes. Are they anywhere near crash territory? No. And homeowners today have far more equity and flexibility than they did during the crash. If you're concerned about what you're seeing in the headlines, the best move isn't panic, it's perspective. And the data right now says this is not 2008 all over again. That is the Real-Time Real Estate segment, brought to you by rsrmoney.com, rsrmoney.com. So I think let's talk a little bit. We don't have a lot of time here, but I do want to just give you a couple of things before we check out. Don't forget to make sure you're paying your credit card bills the right way for FICO scoring purposes. rsrccpayment.com, rsrccpayment.com. We walk you through the right way to pay your credit card bills, your revolving bills. And if you are one of those people who say, Ron, I pay my bill in full after I get the statement, congratulations, you're one of those who are paying them wrong for FICO scoring purposes. rsrccpayment.com, rsrccpayment.com will help you get that correct. And as always, we ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean for engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.